On July 29, U.S. officials finally gave the official green light, agreeing to resume exports of NVIDIA's H20 chips to China. This news brought a sigh of relief to many Chinese who put their faith in the superiority of America's chip industry. The very next day, however, news broke in China that NVIDIA had been summoned by the Cyberspace Administration of China over security concerns with its AI chips. Although NVIDIA quickly issued a statement insisting its chips have no backdoors and cannot be remotely accessed or controlled, the People's Daily, a central government mouthpiece, followed up with a commentary titled, "NVIDIA, How Can I Trust You?" This proved that the Chinese government had not fully accepted NVIDIA's explanation. This series of events seems to prove that Beijing isn't in a rush to resume chip imports. After all, rumors of backdoors in American chips have been circulating for years. If China were truly desperate for advanced U.S. chips, it wouldn't have chosen this exact moment, just as the U.S. restored H20 exports, to press the issue. The Chinese government's actions lead to a deeper question. Is the chip card, America's most prized weapon in its competition with China, really as effective as public opinion suggests? For a long time, the United States has viewed chips as the key to the future and has taken great pride in its critical position within the industry. This pride isn't entirely baseless. Computing power is an indispensable tool for modern productivity and technological innovation, and as the hardware foundation of that power, chips do, in a sense, represent the future. In this industry, the U.S. has leveraged its first-mover advantage and vast financial resources to achieve a monopoly on the most advanced foundational technology. While the very top-tier chips and related equipment aren't always manufactured in the U.S., their production almost invariably relies on American tools, American design software, and American intellectual property. In an era of smooth-running globalization, this monopoly was merely a source of American pride and a symbol of its strength. But as China's rise began to be perceived as a threat in Washington, and with military pressure proving ineffective, and a real war being undesirable and unthinkable, this chip monopoly was weaponized. It became America's chosen tool for containing China's development through a trade war. From placing Chinese high-tech companies on the Entity List in 2018, barring U.S. firms from selling them products, software, and technology, to invoking long-arm jurisdiction in 2019 to force foreign companies using American tech to also cut ties, and finally expanding the ban from specific firms to all of China, America's chip sanctions have escalated step by step. In the face of these groundless sanctions, the Chinese government and its companies have responded defiantly, opposing the measures while pushing for indigenous R&D and domestic alternatives. The Chinese public sphere, however, was thrown into disarray. There was widespread anxiety that the U.S. cutoff would cause enormous damage to China's development. Even optimists who believed in China's resilience could only find comfort in a few arguments, that U.S. companies would also suffer huge losses, that they might lobby their government to lift the ban, or that the sanctions would ultimately spur China's own R&D efforts. The combination of the Chinese government's opposition and the Chinese public's anxiety only reinforced America's belief that advanced chips were its trump card. But recently, in a rare move, the U.S. relaxed its controls and approved a batch of H20 chip export applications for China. Yet, the day after the U.S. confirmed the news, China summoned NVIDIA over security concerns. This can't help but make one wonder if Beijing is in no hurry to resume chip imports. Taking it a step further, one might even start to question if the chip card is really the effective weapon against China that the media has made it out to be. In fact, if you set aside the anxiety of being dependent on others for advanced chips and analyze the situation calmly and rationally, you'll find that the impact of America's chip sanctions on China is not that severe. After all, America's monopoly is not on the entire industry, but is limited to advanced process chips. The production of mature process chips, those 28 nanometers and above, does not necessarily depend on American technology or products. In practical terms, these mature chips are already sufficient to meet national defense, critical infrastructure, and most industrial and consumer needs.
They account for over 70% of the entire chip market. In contrast, the advanced processed chips so prized by the US have relatively limited applications, primarily in small consumer electronics like smartphones, and in data centers and AI, which have higher computing power demands. Even in these fields, it's debatable whether advanced chips are truly irreplaceable. In consumer electronics, while a more advanced chip provides a better user experience, a mature chip is by no means unusable, and the chip is just one of many factors influencing a product's performance. The supposedly critical role of advanced chips in AI is also based on the American narrative that AI progress is simply a matter of piling on more computing power. This isn't necessarily true. Early this year, the emergence of Debug v2 proved this point. Using algorithmic optimization, it achieved a level of performance comparable to ChatGPT with only 2,000 GPUs, compared to ChatGPT's 100,000 GPUs, and even outperformed it in some areas. This demonstrates that advanced chips are not the most critical factor in AI development. Since advanced chips are not as indispensable as they're claimed, America's monopoly in this area obviously cannot severely hinder China's development.
And even if we take a step back and assume that advanced chips are critically important and irreplaceable, is America's chip blockade really that reliable? In a capitalist country like the United States, where money is king, someone is always willing to do anything for a profit. Smuggling is extremely common. Chips are small and light. A single backpack can hold thousands or even tens of thousands of dollars worth, making them incredibly easy to smuggle. As long as chip smugglers exist, it is utterly impossible for the U.S. to completely cut off the supply to other countries through sanctions. The facts bear this out. Since the conflict in Ukraine began, the West has imposed unprecedented sanctions on Russia. In theory, it should be impossible for Russia to obtain any advanced technology products from the West. Even if Russia had a stockpile of chips and weapons before the war, it should have been quickly depleted by the high intensity of the conflict. Yet, more than 2 years into the war, when Ukrainians dismantle Russian missiles, they find chips from European and American companies inside. If sanctions can't stop Russia from getting Western chips, why would the policy be any more effective against China? At the same time that the sanctions are having a less than expected impact on China, they're causing considerable self-inflicted harm to the United States. While it's true that the U.S. can control nearly all original sellers of cutting-edge chips and demand they halt exports to China, China is the world's largest industrial nation and the primary buyer of chips. Without the Chinese market, these sellers have seen their sales plummet, forcing them to absorb huge profit losses. These companies were willing to endure the losses and comply with the U.S. government's demands, largely because they were following a script written by Washington, which predicted China would quickly surrender. The losses wouldn't last long, and in the future they could sell their products to China at even higher prices. But China didn't follow America's script. Instead, it accelerated its pace of indigenous R&D. As the losses exceeded expectations and China showed no signs of folding, these companies began to waver, one by one. This was especially true after China started achieving its own R&D breakthroughs. Seeing that continuing the sanctions could mean permanently losing the Chinese market and even facing competition from Chinese chips in other markets, many companies panicked. In fact, as early as 2023, the CEOs of major chip companies met to demand the U.S. government stop tightening export restrictions on China. However, these companies don't have enough influence on the U.S. government to make it abandon what it sees as a trump card for slowing China's development, especially against the backdrop of a broader anti-China political climate. Furthermore, in the eyes of many uninformed Americans, chips are the future and therefore are highly sought after, with an endless line of buyers. The reality is quite different. Most countries, including those in Europe, missed the boat on the information revolution. As a key product of that revolution, chips have only two major buyers, China and the United States. But America's severe deindustrialization means it cannot absorb that much product. If U.S. chip companies don't sell to China, their only option is to watch their profits shrink, which in turn leads to lower R&D investment and a gradual loss of their dominant position in the industry. But what is even harder for American companies, and indeed the United States as a nation, to accept than short-term profit loss and long-term decline in competitiveness, is that China is shattering America's compute power myth. Whether it's Huawei's dual-chip stacking technology or DeepSeek's generative flow model, these innovations have profoundly shaken the American hypothesis that advanced chips are the future and the future demands infinite advanced chips. This hypothesis is the key foundation propping up the soaring stock prices of U.S. chip companies, with market caps reaching dozens of times their annual revenue and fueling an unprecedented boom in the entire U.S. financial market. And finance is the most important pillar of the American economy. At the same time, with the credibility of the U.S. dollar in serious decline, America has been trying to find a new asset to peg its value to: computing power. Washington has been determined to convince the world that computing power is the most important production tool of the future, a tool that only America masters and that can only be purchased with U.S. dollars. But America's chip sanctions against China have failed to effectively limit China's development. Instead, they have proven that the U.S. was exaggerating the importance of chips and computing power. This, for the United States, is an unbearable weight.